Well, welcome everyone to another exciting class presented by Tony Marino, the branch manager for Guild Mortgage. Today, we want to bring to you the new SmartBuy down payment assistance program. As Tony mentioned, it comes with up to $40,000 of student loan relief, something that's an impediment to some buyers in 2025. And it also combines $5,000 of down payment or closing cost relief. So in our opinion, and in IHDA, because this is a program from IHDA being the Illinois Housing Development Authority, they're seeing more and more homeowners getting into home ownership, or more renters, let's say, getting into home ownership because of this program. And we're going to show you that you can get flyers from Tony. It can be co-branded with your picture, your contact information, such that you can be carrying it around in your satchel, in your briefcase. And when you meet and greet people, you can always be handing it out, or you can have it available at your open houses, in addition to any of the other flyers that Tony has available. So a little bit about Tony. He's the branch manager of the Marino team in Naperville, Illinois for Guild Mortgage. He's a loan originator, and he's licensed in Illinois, Colorado, and Florida. So any of the Illinois realtors, if you have people that are going to be going down to Florida or to Colorado and relocate, Tony can help you with that process also. He specializes in getting people into home ownership using down payment assistance. The one we're talking about today is going to be SmartBuy, and there are other assistance programs through IHDA that he specializes in. He uses education to help people understand how they can become homeowners and be a part of the American dream. In fact, Tony uses this PowerPoint and other PowerPoints that we have on the other IHDA programs. I can only think that you might, as realtors, if you're interested in educating, say, 4, 5, 6 people that are prospects of yours, and they would like to know more about down payment assistance programs, contact Tony, and we'll put together. All you got to do is provide the emails of the prospects, and we'll send out the invitations for you, and you be the host. You introduce, you welcome all your guests, and then Tony will take over and make the presentation on these down payment assistance programs. The American dream. It is still the American dream to buy a home and to be a part of owning something, an asset that is an appreciating asset. But it can be an exciting and yet an intimidating process. I believe in the American dream. I feel that most people still do, but they're unsure as to whether it's achievable anymore with high interest rates. And again, you're going to see with these down payment assistance programs, they actually offer lower interest rates than what you might find in conventional programs. So this webinar is going to provide you with the information that will help your clients qualify for a SmartBuy down payment assistance program, which in essence will help them achieve the dream of home ownership. So why do people seek the American dream? Well, it's the American dream. They want to become a homeowner. They don't want to be a renter the rest of their lives. They want to have a backyard. They want to have a home that appreciates in worth. People that own real estate have higher net worths. So the sooner they can become a homeowner, people will have higher net worths in life. But there's too much misinformation out there. Do you really need 20% as a down payment? No. I mean, many of these programs you're eligible either through Fannie Mae, Freddie Mac, or through FHA. And FHA only requires a minimum of 3.5% down. And many of the Fannie Mae and Freddie Mac programs, if your credit score is high enough, you can qualify for as little as 3% down. Many think they're years away from owning a home. 50% of renters think they can't afford the down payment. However, they have the financial means to maintain a monthly mortgage payment that's about what they pay in rent. So if they can pay, what they're paying in rent, and meaning we realtors and loan officers, can demonstrate to these prospects that, hey, your monthly payment is going to be approximately what you're paying in rent. In some cases, it's less than what you're paying in rent. Would you like to pursue the opportunity to become a homeowner and have a part of the American dream? Why do they think they want to find out about financial assistance? They want to know, is there down payment assistance? Is there closing cost assistance programs? it enhances the quality of life. I mean, when you know that you own, your home, when you own your backyard, when you're in a neighborhood and you know there's stability amongst neighbors, it does enhance the quality of life. And it helps individuals with wealth building and equity appreciation. I mean, everybody aspires to increase their net worth, their wealth, and there's no better way to more quickly increase your wealth and have equity appreciation than through real estate. So, what are the advantages of homeownership? Well, it's a place of your own versus renting and living with parents. It's stable housing costs versus rising rental costs. You build equity, which builds wealth. You get tax deductions on the interest in the real estate taxes you pay. You can borrow against the equity you build in your home or convert it to cash later when you retire. Fancy way of saying you can take the equity later in life and turn it into a reverse mortgage and have that equity start paying you an annuity for life as you enter into retirement age. And homeowners have 45 times greater net worth than renters. Again, something to educate your prospects on as to why they should continue to pursue, even if they're credit challenged, they should pursue getting credit repair through Tony, because once the credit is repaired, we've got the down payment assistance programs and low down payments, and they probably can make the monthly payment because it's going to be approximately what they're paying in rent. Who can use down payment assistance? Well, renters, existing homeowners, because again, these down payment assistance programs are not restricted to first-time home buyers. People that are, let's say, selling a condo and want to move up to a single family or to a duplex, they're perfect for these down payment assistance programs. Your sons, your daughters, your millennials, yeah, so many people might say, well, I already own a home, so I'm not really interested in the program. But you know who's very interested? Your sons, your daughters. I've had 2 daughters already take advantage of down payment assistance programs to become homeowners in their early years right after college. Family members that dream of home ownership. It could be your aunt, your uncle, your brother, your sister. Many don't know that there's down payment assistance programs, and you should make them aware of it. Your friends, let your friends know that you've helped your son, your daughter. Maybe they have a son, a daughter, or a family member that could use down payment assistance. Anyone who thinks they can't buy a home, could use down payment assistance. Again, they're self-defeating. Oh, I can't buy because I don't have 20% down, or I can't buy because I don't have enough saved up. Well, if you've never pursued down payment assistance, you may never know that you really could possibly qualify. And anyone who's interested in buying a home for less than 1 month's rent and a security deposit should pursue down payment assistance. Buying a home is a huge step, but buying a home doesn't have to be that challenging. If you're just missing the down payment, Guild Mortgage, Tony Marino can help. So what if we can help with the missing payment? Or if you have too much in student loan debt? Well, it helps an individual overcome that financial barrier to home ownership. Many people have, they've gone to college, they've gone to a trade school, and they've taken out student loans in order to afford the tuition. And yet the monthly payment is putting their debt to income ratio beyond what's acceptable to an underwriter. But what if you could help them get up to $40,000 worth of student loan debt paid off at closing? That might just, get them into that home that they're looking for. Financial assistance typically is in the form of down payment assistance, closing cost assistance, and now paying off student loan debt. Tony can provide you with access to the IHDA, the Illinois Housing Development Authority programs. This one today deals with $5,000 worth, but there's also the $6,000 program, the $7,500 program, and the $10,000 program. The $6,000 and the $7,500 program, they require no monthly payments. Nor does the $5,000. There's no monthly payment on the 5, the 6, or the $7,500. No monthly payments. The $6,000 is a forgivable grant over 10 years. The $5,000 is it's very similar to the $7,500. It's a zero interest loan. There is no monthly payments, and they are due at maturity. Maturity is 30 years from now, or if you sell the house before 30 years, which typically happens, or if they decide to refinance, then this loan has to be paid off. And the $10,000 one is very similar to the $7,500 and the $5,000. There's zero interest, does come with monthly payments. equal to $83.33 a month of principal only. It's a 10-year repayment of $10,000. When you divide 120 payments, which is 10 years into 10,000, you get $83.33. This matrix, I won't spend a lot of time. We just kind of went through it. It's this is the $6,000 forgivable. Again, it's forgivable over 10 years. The $7,500 program is zero interest loan, and it is due at maturity or when you sell the house or refinance the house. The $10,000 is a zero interest loan with principal only payments. Principal only over 10 years is 120 payments or $83.33. And lastly, we've got the SmartBuy that we're going to talk about more today, where you can get up to $40,000 in student debt relief, as well as you can get $5,000 in down payment assistance. Now, again, I'll say it now, and we'll talk about it later in future slides. The $40,000 up to $40,000 is equal to, when I say up to, the calculation is 15% of the purchase price. So if you have a $300,000 home that you're looking at buying, 15% is going to be $45,000. Well, you're not going to get the full $45,000. The cap is 40, so you'll get $40,000 if you have $40,000 in student loan debt to pay off. You're also going to sign a 3-year promissory note. And the promissory note, which means if you stay in the house for 3 years, the student loan debts stay paid off. You're going to fund the student loans and pay them off by having the borrower sign a 3-year note. What is 3 years? It's 36 months, right? 1/36 will be forgiven each month you stay in the house. So it kind of makes sense. So again, if I've stayed in the house for 1 year, I've got 12/36 forgiven of that debt. If I paid off $40,000 of student loan debt, I've got, after 1 year, I've got 12/36. After 2 years, I got 24/36 forgiven, and after 3 years, it's totally forgiven. I don't have to pay that note back at all. The $5,000, like I said, is going to be a zero interest loan, and it's going to be due at maturity, at the sale of the home, or at refinance, whichever comes first. And let me just go back to the student loan relief. And again, I'll remind us, I'll repeat this in a future slide. We said that it's forgivable 1/36 each month. It also, in the event that you sell it within that first 3 years, say you bought it and you're 2 years down the road, you got 24/36 forgiven, right? So you still would owe 12/36 at closing. You'd have to pay that back, but you would have to sell the house. There would be what's called a deed restriction, which means that you have to sell to another buyer who meets the income requirements and the credit score requirements of IHDA. So bear in mind, the first 3 years is critical under this program. Your student loan note that you signed, to pay off your student loans, that's forgiven after 36 months. But if you don't stay 36 months, there's a deed restriction. You must sell your house to someone that meets the IHDA requirements. Okay. So here's a cute flyer. This is the top part of it. I'm going to show you the full thing later on, but again, SmartBuy works in 2 ways. Gives you student loan relief up to $40,000, from an accredited institution or trade school. So it doesn't necessarily mean that they have had to go to a college, a university. If they went to a trade school, to learn to be an electrician, a carpenter, etc., and they took out student loans to afford the tuition, that student loan debt can be relieved under this program. And again, it does offer then down payment assistance and closing costs. What are some of the eligibility requirements? Well, it's available for first-time and non-first-time home buyers. Okay. Who meet the income and the purchase price limits, which we'll see shortly. You must be purchasing a 1 or a 2-unit single family property within the state of Illinois. It is not eligible for 3 and 4-unit properties. I've put in several people into 2-unit properties under this program because not only is their monthly payment approximately what they're paying in rent, but once they have a tenant in the second unit, their monthly payment is half of what they've been paying in rent. And they just love the fact that they're living in one of the units and they've got a tenant paying their mortgage down for them and with them in the second unit. The borrower must occupy it as their primary residence. It has to be a 30-year fixed rate. It can only be either a Fannie Mae or a Freddie Mac conventional loan. And also FHA is also available under this program. You're going to see, however, though, FHA is going to require a higher credit score. What are some more of the eligibility requirements? The minimum credit score is 640 for the conventional for Fannie Mae or for Freddie Mac. On FHA, it's 680. So you have to have better score to use this program for FHA. If you use the other down payment assistance programs, the 6,000, the 7,500, the 10,000, you only need a 640 credit score. So you would, if you want to pay off student loan debt and use FHA, you got to have a 680 credit score. The maximum debt to income ratio is 50%. So the borrower must contribute 1% of the purchase price or $1,000 from their own funds, whichever is greater. So again, if on a $300,000 purchase, 1% is going to be $3,000. So they would have to contribute $3,000 under that example. Homeownership counseling is required. That can be done online. Tony can give them the link to the website and they can do it online. Up to $40,000 in student debt relief is funded by the buyer signing a 36-month promissory note. Okay, so they sign a note that says, hey, we're going to forgive this debt 1/36 each month. Okay, that's understandable. And there's going to be a deed restriction should you sell the property within the first 36 months. And the deed restriction, as we talked about, it's, you have to sell it to a buyer who would qualify under the IHDA eligibility requirements. And the amount of the student loan debt is equal to, the formula is 15% of the purchase price. So again, if you had a $300,000 home, 15% is $45,000. If you had, it's capped out at $40,000. And let's just say, for sake of discussion, this is a good point to bring up here. You must pay off all student loan debt. So if your student loan debt is $45,000, but you're being capped out under this program at $40,000, you have to pay an additional $5,000 to pay off the full $45,000 worth of student loan debt. This is not a partial student loan debt relief program. It is a total student loan debt relief program. You will get from the state of Illinois, from IHDA, you will get up to $40,000. But if you have more than $40,000 in student loan debt, you must bring that to the closing to pay that student loan debt in full. The remainder cannot remain out there. And lastly, $5,000 in down payment assistance or closing costs is a 30-year second mortgage note with 0 interest. Okay, great. I love that. No interest, no monthly payments. Like that even better. And it's repayable upon, we've talked about, a maturity, refinance, or sale of the home, whichever comes first.
Hey, Glenn,
Yeah, Tom.
back to the credit score. So for FHA, the minimum credit score is still 640, but the debt to income ratio has to be below 45%. So for FHA, if the borrower has a ratio of 40 above 45 to 50, they're required to have a 680 credit score.
Gotcha. So the 680 only comes in when the debt to income ratio is above 45.
Yes, for FHA.
But you can then go back to the 640 if you're under 45% debt to income.
Yes.
Cool. Great. Thanks so much.
Yep.
The interest rates, there's only one interest rate. So again, you can always be confident whether you're using this program, the SmartBuy, the 6,000, the 7,500, the 10,000. Your client is never ever going to say, "Oh, why did you put me in?" Why did you ever have me talk to Tony? The rate's terrible. To begin with, the rates are better than conventional. And there's only one rate, and not every lender is a IDA certified lender. Guild Mortgage, Tony Marino, they are certified as IDA eligible lenders, but there's only one interest rate. So when they start calling around to other banks or whatever and going, "Well, what's your rate for an IDA?" IDA sends out every single morning. It says, "This is the rates for the day, folks." And every certified, accredited IDA lender, that's the rate. Your client will never, ever have to pay a higher or a lower rate than what IDA offers each and every day. And again, the rates for this program, they're a first mortgage loan, either FHA or conventional. So here we are at the rate sheet as a 117, and you can see here that if you use the FHA, here's SmartBuy, 6.375. That's a pretty good interest rate. Tony, how does this rate compare to, if they don't use the down payment assistance program? Are you there, Tone?
Yeah, I'm here.
How did
So
Go ahead.
I would say FHA. So I'm just looking at Mortgage News Daily right now. This is as of Friday. FHA 6.5, and then a conventional 7.125.
Yeah, and you can see here, conventional is 6.875. So these programs, I have favorable interest rates in addition to all the assistance and the paying off of student loans and all that good stuff. But again, if somebody said, "I don't have student loans, but boy, I could use $10,000, Tony would switch them over to that $10,000 program. And these rates apply, whether it's the forgivable is the $6,000 program, the deferred is the $7,500 program, the repayable is the $10,000 program. So if they took $10,000 and went FHA, their rate would be 6.375. That's pretty doggone good in today's marketplace. Here's the income limit. In Cook, DuPage, Kane, Lake, McHenry, and Will, $134,520 for the borrower. So what I'm saying is, if you have a husband and wife, and if she makes $130,000, they qualify for the down payment assistance programs, any one of those four programs. And again, you would then not have the other person. They can be on title. Say that this is the husband. He made $130,000. He's our borrower. We would not put, if they needed and wanted the $10,000, or they wanted the SmartBuy to pay off student loans, we would then not have the wife be a borrower, but we would put her on title as a co-owner of the property. And then here's the purchase limits. We'll back up to the income. I mean, Melinda and others, Andy, I gotta believe you guys know a lot of people that make less than $134,000. In fact, probably a majority of the people we all know make less than that. So having said that, a majority of the people that you talk to would qualify for these down payment assistance programs that allow them to get lower rates and possible payoff of student loans. Here's the purchase limit. 610 for a single family, 610, almost 611,000. It's huge. If my client's buying like 300, 350, well, way under the 1 unit purchase limit. And for 2 units, 754,000. That's a huge number. That's going to get them into most any type of housing that they're looking for. So I always think the purchase limits, they're great. They're huge. I don't think any of my clients have ever bumped up against it. And I've just had to make sure that, we have a borrower. Again, if you have a husband and a wife, if one makes 70 and the other makes 60,000, that's 130,000. Okay, you're still eligible because the borrowers make less than this. But if one made a lot of money and the other didn't make a significant amount of income, and it pushed them over the 134,000 combined, I'd say let's drop let's drop the second person and just use the first person who makes a lot of income as our borrower. There are other counties than what I've shown here than Cook, DuPage, McHenry and Will, and they do have different limits. I mean, they vary up and down by several thousand dollars, depending upon the county. But most of us are concerned about Cook, DuPage, Kane, Lake, McHenry, and Will. Again, refer to the IHDA website and you'll see the other different limits. So let's look at the cash needed, to purchase. How can we structure a home purchase using this new SmartBuy program? Well, let's look at the three buckets of cash. So if I did a $300,000 purchase and I used FHA, which is 3.5% down, the assistance is $5,000. So again, you see the 10,000, the 7,500, the 6,000, the 5,000. We're using 5,000 under the SmartBuy program. The average closing costs are about 5,500. IHDA charges a 1% of loan amount origination fee. It's about $29.10. And last but not least, you guys have now, under the new laws, the buyer has to pay a buyer's agent fee. And I'm using 2.5%. Again, I'm not a realtor. You guys can say, if I'm misspeaking here, but I would say most of your deals, you're having the seller pay the buyer's agent fee, just like they did in the past, but you've got to get, them to agree that they're going to pay the buyer's agent fee. So those are the assumptions. And if someone was renting a $300,000 home, they'd probably be paying about $3,000 a month with a security deposit, or they're out of pocket $6,000. On the purchase side, they're buying a $300,000 home. 3.5% is the down payment, and that's $10,500. And you always have to ask who pays. Well, we know that the down payment assistance you said was $5,000 under the SmartBuy program. So $5,000 comes from SmartBuy, leaving $5,500 that the borrower has to pay. Okay, so 5,500 and 5,000 is 10,005. Put a check mark. We got all the funds we need there. Then go to the closing costs. Closing costs are going to consist of the ordinary and necessary closing costs of 5,500. Then there's going to be the IHDA loan origination fee and the buyer's agent fee. Okay. Now we're looking at $8,400. I'm sorry, the total costs then are $15,910. The seller is paying, because you, the realtor, have set it up contractually that the seller will pay the buyer's agent fee. So that $7,500 is being paid by the seller, not out of the pocket of our customer. So $8,400 has to come out of the borrower's funds. However, again, being conservative here, you could have created a program where you negotiated that the seller pays $5,000 of this. And again, that would have brought this $8,400 number down to $3,000. But I'm just, this is the worst case scenario, that you're not getting any more relief from the seller. Last but not least, bucket number 3 is prepaids or escrows. And in the state of Illinois, we pay our real estate taxes in arrears, which means that in the year 2025, we're paying the year 2024's real estate taxes. So if we have a closing on May 31st of 2025, who lived in the house for the first 5 months of 25? Well, it was the seller. And so the seller owes our buyer 5 months worth of real estate taxes as a credit. And the credit always exceeds what we as lenders are going to ask them to put up into the escrow. So this is really a negative number. We put it in as 0, but it's a 0 number for the escrow because of the real estate tax credit coming from the seller. So when you add up that he's got to come up with $5,500 in down payment, $8,400 or less if the seller's paying part of the closing costs. And again, you could, if you wanted, negotiate, increase the purchase price if the purchase price can be increased and you feel that it'll still appraise at a higher number. So again, if you wanted $5,000 for the seller to pay in closing costs, but initially they're saying no, you could go back to them and offer them, instead of $300,000, you could offer them $305,000 $8,000 for the purchase, provided that the seller pays $5,000 in closing costs. And why wouldn't they do that? They already agreed to 300,000. What is 305 minus 5? It's 300,000. It's net zero to the seller, but it's meaningful to the buyer. They don't have to come out of pocket for $5,000. But again, worst case in my example here, the seller's not giving anything, and it's $8,400 in bucket number 2, zero in bucket number 3. So when you add up all the yellows, they have to come up with $13,910. Part of which can be their own funds, part of which could be gifts from blood relatives, mom, dad, brother, sister, grandma, grandpa. And it can, and so that in turn would be the out of pocket that they would do as compared to the $6,000 if they were to be a renter. So what's the housing payment on a $300,000 home where you're doing $5,000 under the SmartBuy program, zero interest loan, and the rate is 6.375? Well, your principal and interest is $1,838 plus taxes, plus insurance, plus PMI. So they're paying $2,695 versus say $3,000 in rent. So when you start showing your prospects the fact that they can be buying for something that's less than or equal to their monthly rental payment, they should get a little excited about it. They will find ways, they'll find out how favorable they are in the eyes of mom, dad, brother, sister, grandma, grandpa, to help them with gift funds if that's what it takes. And again, many of our customers, many of your customers are participating in 401k programs. And again, they can take out a loan under their 401k. And the interest on that, the repayment of that, goes back to the individual. So if Glenn Marino had a 401k and I had $50,000 in it and I borrowed $25,000, the interest was 8 or 9%, that's me, Glenn Marino, earning 8 or 9% because I get the interest. My 401k is the bank, and so I'm putting 8 or 9% interest into my 401k. It's a great, great deal. So anyway, I digress a little bit. So again, you start showing them that you can make a monthly payment. Again, Tony can help you calculate the payment on property by property and ask them what they're paying in rent. Again, it assumes a 6.375 rate on an FHA. And what if it was a 2 flat? Now you would subtract the rent received from the second unit. Oh my God, if you were getting $1,000 a month in rent, your payment is now $1,695. They're going to think that, you're the greatest thing that ever walked the earth. So let's summarize the 3 buckets of cash. The down payment, who pays? You can pay it, or IDA can pay it, or a combination. If it's with a conventional loan with a high score, you can put 3% down. With a conventional loan with a lower credit score, you'll be putting 5% down. FHA, you'll be putting 3.5% down. Then if you use the IDA program or the SmartBuy, again, you can put as little as 1% of the purchase price, and you can use $10,000, $7,500, $6,000, or in this particular program, $5,000 for down payment assistance. Bucket number 2 is closing costs. They're approximately $5,500, you said. Okay, and there's an additional 1% fee if we use the IDA funds. They charge us an origination fee. So who pays it? Well, you, the borrower, can pay, or IDA can pay, or the realtor can negotiate to have the seller pay it by outright asking for it. Or if they refuse, the seller refuses, you ask if the buyer can pay $5,500 more for the seller's home, provided the seller pays $5,500 of the closing costs. When they use their calculator, the math works out that the seller is back to his agreed upon selling price, but it's so meaningful to the buyer. Your lender can pay some of your higher interest rate, but only on non-IDA loans. So again, you can get some of the closing costs paid for, but again, I digress, on non-IDA loans. We're talking about IDA today. So how much of your own funds were used for closing costs? Well, could be as little as 1% of the purchase price. And if your realtor does a great job of negotiating, That's all you would be out of pocket under the IHDA program, being very optimistic. Bucket number 3, prepaids. Who pays it? Well, it's first off, in bucket 3 is the prepaid interest that you pay from the date of the closing to the end of the month. That's why a lot of purchases take place towards the end of a month. So if you're closing on the 28th of the month and there's 30 days in the month, you're only paying 3 days of interest. You start using the money on the 28th, the 29th, and the 30th. So you only pay 3 days. What's also in there in the bucket number 3 is escrows. 2 months for homeowners insurance, anywhere from 2 to 8 months of real estate taxes. But because Illinois, we pay the taxes in arrears, there's a seller credit. Go back to my example. We closed May of 2025. The seller lived in the house for the first 5 months. He's got to give our buyer at the closing 5 months of real estate taxes as a credit. And the credit always exceeds what the lender's asking the buyer to put up into the escrow at closing. So summarizing, how much of your own funds? Well, it could be as little as 1% of the purchase price for your down payment. Your closing costs could be 0 if IHDA and or the seller is paying the closing costs. And bucket number 3 is seller because of the real estate tax credit in the state of Illinois. So what are you waiting for? What are what are your clients waiting for? Let's take some action. Now that you reviewed how little cash is needed, what's your next step? Well, educate, and educate your prospects. Give them a co-branded flyer. Start doing, you're in January. Start doing monthly, quarterly homebuyer seminars. I mean, you're in the business of talking to people. If they would like to attend an educational seminar on the down payment assistance programs that are available in the state of Illinois, get a hold of Tony. He's got the Zoom software, he's got the PowerPoints, and you look like a hero because you end up being the master of ceremony, introducing and saying hello to your guests. And at the same time, you're introducing your guest speaker, Tony Marino or Glenn Marino. I'm going to show you the co-branded flyer toward the end of this presentation, which we're about to get there. So your goal is get your clients pre-approved for free with Tony. Get a free credit report and a credit rescore. If they don't have the score that's necessary, say a 640, they got a 630, a 610, a 580. Let Tony look at it. Tony's got the resources and the formulas, and to ask the computer, what do I need to get this client from a 580 to 620? It'll say, pay this off, pay this down, pay this off. Great. Do that. Send in the documents that you've done, taken those action steps. Tony can rescore the credit score for the individual, and now they're on their way toward home ownership. Assemble the necessary documents for a full app. Get an automated underwriting approval. Tony will issue a pre-approval letter. They now have a yes to a loan request. They can go shopping for a home with confidence that the realtor can now attach a pre-approval to. And they will review the action plan with Tony to make sure they understand what it is that they got to do to either improve their score or to qualify for the down payment assistance. Again, I reiterate, start hosting homebuyer seminars. If you don't want to do it monthly, do it quarterly, but do it. I mean, people expect you to educate them on home ownership. And let's let them know about all the different programs that are available in the state of Illinois. Tony thanks you. His commitment is to financing dream homes and always being available for questions. He can be reached at 847-804-1059 and or by tony.marino@guildmortgage.net. Questions or comments? And while I'm asking for that, you can unmute yourself for any questions. I am going to stop sharing so I can show you I'm going to show you the flyer. All right, well, here's the SmartBuy flyer. And again, it's free of charge. You're down here, your name, your last name, your picture, your email, your phone number. Here's where you can put your website if you have a website. This can be co-branded with you and Tony and can be sent out. It's going to talk about the student loan relief. It's going to talk about the down payment assistance, the main requirements about credit score, and must have at least 1,000 in student loan debt. So again, to me, it's a great thing to carry around in your briefcase as another, you want to call it arrow in your quiver. Take it out and start handing it out to people, letting them know that you've got not only this program, Tony's got other down payment assistance flyers for the other $6,000, $7,500, and $10,000 program. And you can, you should have both of those in your briefcase, handing them out to clients as you meet and greet them. Obviously with your contact information, because if they're not willing to take action today, they might take action down the road and be able to then contact you and say, you know what, we're tired of renting and we'd like more analysis done on, pull credit for us, see if we qualify. Let's look at our income. Do we qualify there? And get myself pre-approved for what can my income can support. So you and Tony can do a great job of helping, people who are currently renting, currently living with parents, become qualified home owners. Any other comments or questions?